I hear that whole life insurance is a scam all the time, but I usually hear this from individuals that one, have just heard it from someone else, or two, they don't fully understand the product. And a lot of times they are trying to help others because they may have been taken advantage of or scammed when getting a whole life insurance policy. However, with a whole life insurance policy, you can set it up where it is beautiful from start to finish, which really mimics what many corporations and wealthy families do with these products, which I would not consider to be a scam at all. What I try not to do is just put a blanket statement on something because of one individual or one product that was poorly sold. For example, I like pizza. If I go to a pizza shop and I'm sold a piece of pizza with glass in it, I'm not going to say pizza shops are a scam because I got a bad deal here. No, I just went to a bad pizza shop or someone made an accident So with that said, to give some context here, where whole life insurance is a scam or people often feel ripped off is when they meet with an agent, they're shown an illustration and they're told, if you continue to pay this premium, by the time you're 65, you're going to have millions of dollars in cash value. So they follow that premium schedule, they make the premium payment every single year, but as each year passes, they see that they have less and less in cash value compared to what was shown on that illustration. The illustration may have shown a growth rate of 5%, but then the actual growth rate when they crunch their own numbers is between 1 and 2%. It's like, what the heck? This thing isn't doing what it's supposed to. It's a scam. Ever feel like that? I would feel like that if I was sold a policy in that manner. But the thing is, you can take that exact same whole life insurance policy and set it up where it's cash rich from the beginning. That example I just described will usually have like zero in cash value in the first year or a very, very low dollar amount. So here's exactly what I would do. When you put money into a policy, you can choose where it goes. I would minimize the insurance expenses as low as the company will allow. You can ask your agent to do this. In the first year, here's what to look for. I would look for somewhere between 80 and 90% of what I paid into the policy to show up in cash value. So I paid 10 grand, I want somewhere between $8,000 and $9,000 in cash value. And then I want to see a break-even point somewhere between years 3 and 5. The break-even refers to when my total cash value is equal to or greater than my total payments. If you do that, you'll see the cash value perform over time. We track policies with people we work with. We've had some policies on the books now that are more than 10 years old that have been producing more than a 5% net return year over year, and it's tax-free as long as we follow IRS rules. So it does work. I hope this helps. Thanks so much.